Welcome to the deep dive video. This video is designed to go over the charts that I don't really show either very much or at all in the daily video updates. And so after I get done with the week, I look through all the charts and I prepare this video just to show you those things that still might be giving us some insight, even though we're not using them in our day-to-day evaluation of what's happening in the market. This is being prepared for Monday, April 3rd. The first chart is called the VIX range. What I've done is I plotted the VIX on this chart and then I made it invisible. On top of that, I plotted a 50-period exponential moving average. The idea behind this is to get a range for the values of the VIX. From about 2008 through about 2012 or 13, we had a range of about 40 to the upside and 20 to the downside. Then we shifted from about 2013 up until the COVID plunge down to about 20 on the upside and 13, 12, 11, even to the downside. And this makes it more dynamic. Usually we use static numbers, 20 to the upside with the VIX and 12 with the downside. This lets us be a little bit more flexible with that. Over on the right-hand side, we've been having a range of about 27 to 28 on the upside and down to about 20 on the downside. Now this will vary quite a bit from the current value of the VIX because this 50-period moving average takes a while to calculate and move in a general direction. This next chart also looks at the VIX, and it places an RSI 9 period on the indicator. When we get to an extreme positive reading, that means that the VIX has really gone up pretty far, pretty fast. That's usually when the market's going down. Well, as we've been going back up, we're actually dropping with this value, but we're not getting an extreme reading currently. Another chart takes a 253 simple moving average. To be more exact, there are 253 trading days each year. This calculates the overall direction of the VIX. And when we started hitting problems in early 2022, the VIX started going up and up and up. Remember, when the VIX is high, it's time to buy. Well, it keeps going up and up and up. And then when the VIX is low, it's time to go. This just shows that fear has been increasing over the last year as the markets have hit some really challenging times. We also look at a VIX to S&P 500 correlation. Sometimes the VIX does some weird things, and so this gives us an idea of what's happening in the VIX. We're not really seeing anything all that strange right now. When we really spike up like this, a lot of times that can give some support to the market because it's getting extra nervous. Also, we just want to trace where are we at from the all-time high. Even with the week that we saw last week, we're still down 14.72% from the all-time high. This is another chart that I created. It seems like we spent a lot of time around the 4,000 level. We go a little bit above it, then a little bit below, above, below, above, below. We've chopped right around this level for a significant period of time. This is a new chart, which is similar to Fibonacci retracements. I measure from the low that was set at the COVID low, and then I draw this all the way up to the all-time high, and these are called quadrants, where we take this whole area and break it into 4, and these can often serve as pretty good support or resistance levels. You notice when we hit the low in October, we came right down to this 50% level, and then we're able to bounce up off of that. Right now, we're hitting the upper end of the 75% basis, and I'm going to be including this in some of the daily videos. This is a new chart that I just developed over the weekend. We're getting close to the point where we might have some significant overhead resistance at current prices, and as I record this video, before Monday's session, we are very overbought, so to see some kind of a pullback would not really be a surprise. Then the technical alerts, every day these are generated automatically, not just in the S&P, but in all the other indexes, as well as the sectors. This is for Friday, and sometimes this can fill up the whole screen. Other times we don't get any signals at all, and we read this from the bottom up. When we opened on Friday, the healthcare sector ETF had a bearish crossover. The 50 dropped below the 200-period moving average, where discretionary had a bullish percent index above 50. TSX, that's Canada, they had a good day on Friday. The Dow went above 33,000. Then the NASDAQ went over 12.1 and then eventually over 12.2. The S&P was able to close above 4,100. Then oil bounced back up and went back above 75. Then we take the 5 main indexes that we look at and we try to come up with a non-emotional score for each index. We have the Dow, the S&P, the mid caps, small caps, and the NASDAQ 100. Well, coming in first place is the NASDAQ 100, represented by the triple Qs. It's looking the best right now with a score of 93 out of 7. This is scored from 0 to 100, so the closer we get to 100, the stronger the technical score is. Then in second place is the S&P at 75.3. In third place is the Dow at 69.4. Fourth place are mid-caps, 51.4. And then in last place, and the index that's been suffering lately, are the small caps at 27.8. Some other charts to show you. I don't have an awful lot this time because I use so much since things are really happening in the market right now. This is a short-term rainbow, and we're starting to come up through the top side of this rainbow. These lines on here are a 10-period moving average all the way up to a 50-period moving average. So on a short-term basis, this is looking much more positive. Then we also look at the standard deviation. How far is price moving away from its standard or average price? It had been really declining, and now it's starting to come back up as we're seeing a little more volatility in the markets. The mass index is not generating a signal right now. When we pay attention to this is when it goes above the red dash line and then above the green line, and then when it comes down back over the red line again, that is a signal. Whatever the market's doing at that time, we look for the opposite thing to happen. Connor's RSI is just like a regular RSI. It's giving us a pretty positive reading, but it's not extreme right now, so that's why I didn't include it in the daily video. Here's an intermediate term rainbow going from 50 periods up to 100. This is also showing some recent strength. And we also look at the ease of movement. This tries to measure what is the path of least resistance for a stock or an index. Going back one day, the least resistance was to the upside, and over the last 14 days, the S&P has also shown a lot of improvement. I also plot a 20-period simple moving average of the open, high, low, and close. When we get pretty far above this, sometimes that can mean that we're really strong in one direction or the other. If we start to pull back, one of these lines may act as support, and then we might be able to bounce up off of that. Then a long-term chart, we have the long-term rainbow from 50 periods up to 250 periods, also showing some strength. And then we have a very long-term oscillator called the Special K. It's still negative overall. It's trying to turn back up, but it's not positive until we cross above this red line. You notice when we crossed in early 2022, that's when the markets really started to have some problems, and we've been fighting ever since then. If things do switch back more positive, we would expect this black line to cross back above the red line. Some broad market measures, I only have one. This is the Vixen. This is the VIX on the NASDAQ 100. I can't use the upper part of this chart because of all the erroneous data, so I look at the line down below. As the NASDAQ 100 has been going up, we're seeing fear really dropping off. Two range of change charts to show you based on 250 periods. We're showing a little bit of improvement on this chart, and then this chart goes back even longer to 1980, showing how things are improving slightly. And that's it. All the other charts were used in the videos this past week. I hope you found this helpful. I hope you have a really good day, and I will talk to you in the next video.